Form 8858, Information Returns for U.S. Persons with respect to foreign disregarded entities, and you will see that that term is referred to as FDE. And the other term, which we just discussed, you're going to see here under what's new, is QBU, Qualified Business Unit. So two things I want to focus on the form. One, what is new? Schedule M is updated. It's been around for a couple of years, but I want to go over the special items on Schedule M. The other thing is the QBE, Qualified Business Unit. We saw from that previous website that this is a major concept, and it's something that the client needs to be aware of. Category 1 Fowlers. I mean, this is just so interesting to me because really, if you own all of the entity, you just have to report everything. So I just kind of going to guide you through what forms you need. Reporting exchange rates on Form 8858. Form 8858 really seems to, especially the Schedule C, to be focused on this qualified business unit, currency gains and losses. So your client's going to be shocked when you show them how much work is involved, and we're going to go over some of the major aspects of this in just a second here on the instructions. Functional currency is always a big item, some tax planning opportunities in some cases. Unfortunately, you have to really get to know these code sections and these regulations. Hyperinflation exception, so far a few nations have that, have hyperinflation. Some have just given up their currency and gone to the US dollar. But I want to get down to Schedule C here, because it is the beginning of this qualified business unit reporting in foreign currency gain and loss. And once again, a little bit like the Form 5471, GAAP is a big important aspect. So the client statement, for the most part, need to be on GAAP. We discussed this with the controlled foreign corporation, same concept here. And Schedule C1 is where they get into the qualified business unit. We can see that the schedule is not as long as the instructions, but the tax law is enormous. Once again, back to the Section 988, Section 987 currency gains and loss rules. And you see the structures for that go on pretty far. So with this, we're going to close this form and get over to the other form. Starts off pretty nice. The Schedule M, actually going to go over this first. The Schedule M starts off pretty nice, just your name and so forth, but it quickly gets into very complex items if your client has this fact pattern. The controlled foreign partnership, so we talked about the form for that. The controlled foreign corporation, we talked about that form. So this is the related party transaction Schedule M, which we've seen before on the reporting for the controlled foreign partnership and the controlled foreign corporation, and also on the Form 5472. Once again, these are places where people have done some great tax planning. The IRS is trying to get a grip on this. And so the form becomes a matrix. And you almost, if your client has one or more of these entities, you almost can't spend too much time on it because there's a lot to report. It relates to transactions with domestic corporations. It relates to just about any type of transaction with anybody who's related. And this is the type of planning, this is where planning should be done way before the beginning of the year, because each of these is a Section 482 topic. And you don't want to be stuck getting a valuation penalty because you've charged too much or not enough for a transaction. So amount borrowed, again, see instructions. We're going to see that's going to be the highest balance. Not too much concern within capitalization here with a disregarded entity. But if the loans are to a foreign corporation, well, then you're going to get into that concept. So now let's get to the form itself. Close this guy out here. Form, pretty much what you would expect. If you've seen it before, it's not going to be any changes to this for the C1 schedule. Tax treaty, always important. Place of corporation, functional currency, can start off with that. Effective date as a disregarded entity, that means you have had to make an election. Keep in mind, every foreign entity that limits the liability of an owner is a corporation. So that means, for most part, every foreign entity you've had to make this election out is going to be a foreign corporation. Branch in the United States, that has to do with U.S. taxation. If it's disregarded, it's going to be pretty moot to you because it's owned by a U.S. person. And we're going to get down to the income statement, pretty much what you expect. We're now on Schedule C1, and C1 is the currency gain and loss information. And so the schedule is pretty small, but the work behind it is tremendous. And you just want to, look on. You really want to spend your time with this because with this currency being so volatile, it's very important. And then GAAP, again, for the statement, may not be your tax basis. You may be cash basis. So you're doing a GAAP statement. They really made this balance sheet small, right? I mean, there's not. They don't really want to. They don't. Maybe the saving paper. It's hard to understand. Ownership interest in any trust, found that to be interesting, even domestic trust. The IRS is starting to read the news, and they read that for the last 10 years or so, that a domestic trust can also be treated as a tax haven trust. And so they're starting to look at that. Once again, asking this information probably more to try to learn what's going on. And then with controlled groups. And once again, dual consolidated loss, more with C corporations. Usually small business is not a C corp. This would be more for a publicly traded company. You may have a domestic C corp that's using this, but I've only seen it just a few times. CFC issues. So all the information you learn from these other two forms, if they're involved with the client's business plan, blend into this form. Current earnings and profits. I find this to be really a odd thing to ask on a disregarded entity, but it's there. My guess is it's just a carryover from the controlled foreign corporation rules. The people at International, unfortunately, don't even know enough to know what not to ask for and what to ask for. So that's the end of this form. Like I said, the form itself is pretty easy. It's the underlying information for the qualified business unit that is not so easy. And it's the place where we can really shine as an accountant. So we're going to open it up for questions and answers.